Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button. Subscribe if you already have it. Let's get into today's news. It's 5:30 May. Uh, First off, stock market today down. Dow Jones down 330 points. S&P down 31 points. And gold was up $3 or $4. So that is very good news. And I can contribute this. If you actually look at it, yesterday was a bad day. In the morning open, well, not the open, like official open of trading, but early in the morning, I looked at my Kitco. Gold was down. And guess what? The economic data. If you actually look at it, let me share my screen real quick. You look at it right here. GDP 1.3, forecast 1.6. Very poor. Corporate profits went down 1.7%. Consensus 3.9. Trade trade deficit much higher, 99.14. And initial jobless claims don't matter. And core PCE prices 3.6%. If you look at this pending home sales, that declined much higher than expected, 7.4%. Expected year over year was supposed to be an increase of 0.5%. Pending home sales here, negative 7.7% month over on a month basis, much higher than expected. And this was all very poor economic data. Inflation was in line with expectations. And I think that's why gold turned around. And even though it was marginally up, it was off. And this is very bullish. So even if inflation decreases, if the economic data, which is poor today, keeps showing up like this, having to ease because of and having to print money and buy assets because the US is in recession, that is the most bullish case scenario for gold. And that is what we need. Bad economic data for gold, and we are getting it. And to show that we are also in very bad economic times, we need any more proof than, let me see, any more proof. Let me see if I can get my screen here. Does it show my screen? Let's stop share. I'll share one more time. Look at Marvell. Let's see. Yeah, right here, Marvell Technology skids. As Q1 results, guidance fails to impress. Now, Marvell, if you actually look here, produces semiconductors and related technology. This is a technology company. So if you look at it, this is not bullish for the economy. And the economic data is, as I said in this podcast, I follow it, it is declining. It is getting worse. And if you look at it, it's starting to hit the companies. You know, we went over so many companies on this podcast. I just added Marvell Technologies, Salesforce yesterday, Starbucks, McDonald's, everything. All that very poor data. So yeah, this is very bearish for the markets. And that's why you see the markets really taking a dive. Easing will not help if the perception and the economic data is poor. The easing only helps the stock market. The economic data is good. I've done many videos. You're going to have to look through and scroll through my history and see where I go back to that. I've been doing this since 2022 now, on and off again. So, and that's the thing. We need poor economic data. Because money printing alone does not juice up the gold price. If the economic data looks good and money is printing, that money will just filter to the Dow, the Nasdaq, the S&P, consumer goods, electronics, technology, etc. So yeah, that's pretty much what we have. It doesn't seem like inflation is quieting down anytime. If it really perks up, that would be interesting because then we have stagflation. If the economic data keeps declining like this, and inflation keeps going up like this, well, even if the Fed just leaves rates similar, that would be bullish for gold too. So very good day today. We'll see tomorrow. PCE comes out, and that's all I have really for today. So I hope to see you next video. And oh, also, looks like my projections for gold going up to 2,500 to 3,000 are coming to fruition, especially if we get really bad economic data. Then the Fed will be forced to ease. So anyway, hope to see you next video, and hit that like button and subscribe if you haven't. Bye for now.